Good evening. Just doing a little bit of a later evening update since yesterday. So it's almost 18 UTC. Looking at Bitcoin as the markets are still open in the US. Big things we want to look at as the data that came in through last night and today. The federal interest rate decision came in as expected. That's number one. It's good. Yeah, today we've got the GDP came in much lower than expected. Initial jobless claims much lower than expected. So a bit of a mixed bag for bearish on the dollar, bullish on the dollar. At the end of the day, tomorrow pre-market, so an hour before, we have core PCE data. So expect some major outliers or deviations from the forecast to increase the volatility an hour before the New York opens. Moving on to specific to Bitcoin, because tomorrow is Friday. Long short ratios, we're still seeing, pretty aggressive flip that came in last night. So we were majority long yesterday. That flipped in the last 24 hours. We are now majority short. We're seeing a little bit of upticks in longs just because we're gaining some levels here locally, but still at 55% short overall, with some nice levels just below us that if we do break, there's probably a snap correction back down. But the upside still looks good as we are now trending very solidly to the upside, at least on a couple different time frames. The funding rates are back into the bearish mode. So they are over 0.01, definitely bearish. The big outliers earlier today were OKX. Now we have DYDX being very, very bearish. But overall, it's still slightly bearish. It's not crazy so, but yeah, there is some pressure because we are taking out the short book with this upside move. On the liquidity and liquidation side in the last couple days, we still have not taken out that really big liquidity that's just above us before it starts to thin out closer to like 109, 108 really. But the big thing here is there is a nice little juicy part below us. If we do have a local little break of that level, we should see a snap back towards the daily open. And then we can start reassessing if we're going to have the continual push to the downside. The number one thing we want to see here on the higher time frame is, can we hold the whole local trend to the upside and start getting a macro short squeeze higher? Well, it's still very possible. The liquidity that's built back on the short side can easily take us to 114. There's some more aggressive models that can take us to 118. I don't really see that yet, but I think the next breakout, the 114, needs to be a target. On the higher time frame, the liquidity below us is quite minimal. Even back to 100K, it's not grand by any means. So if we do get back below 100K, we start opening up the bigger push back towards the low 90s to flush out these late liquidity. Below that, it seems less likely, especially with this kind of bullish recovery we've had over the last couple days this week from the Monday nuke. On the order book side, so just looking at the delta here, we are actually on the bullish side of the delta on the lower time frame, which is nice to see. I'll jack this up to the 15-minute. It's a little bit more accurate. So it is perking back a little bit up. It's been pretty heavy on the sell pressure on the spot side. So this is just showing general order book has been much more sells. That's actually flipping now. So we're seeing a lot more spot buys. However, we don't see that on the perpetuals. It's very little. We're conversely earlier in the day, and of course yesterday we had a lot more strong spot buys going into Tuesday, and then even back at the lows here again, there were some spot buys correlated with very high bullish moves, very large bullish moves on the liquidity delta. But for right now, the perpetuals actually, as we're speaking, are stepping in pretty nicely. We want to see the spot buys to come in aggressively as well to really accelerate that price move. Effectively, you want to see both moving at the same time. And then finally, looking at kind of the liquidity order book heat map, the big thing here that sticks out to me is in the last couple of hours, since we made this new breakout move high, the big holds that we had down here at 96K to 97K, they've been starting to get pulled. So they're quite thin. They went from about 229 at each level, 220, and then they've been pulled to bear their, 180 or 100, excuse me. So hundreds of Bitcoin are getting pulled out. Where are those orders going since they weren't filled? Well, we've seen a stacking above us of large orders. If we do break out of 106, I would expect this to go right to 107 to fill these orders really effectively. But if we start losing the local low, these will act as kind of a bumper pushing us down towards 104, where we can expect a potential retest. So going on to the chart, general idea in this zone. So from yesterday to today, we talked about how we want to see nice holds of level. We did get that. It looked a little bit droopy. We got some higher lows going into an upside drive. We were looking for a breakout above that weekly open, right? We talked about the level 102.8. We got a nice bullish back test of that level to go up and break the high at 105. Along with this, we've also seen the Bitcoin CME gap get filled. So the weekend gap has been totally filled. We've seen a strong recovery on Bitcoin across the board, and we're regaining the weekend structure that was actually holding us down. Across the board, it looks pretty bullish to get a drive up towards 107, potentially all the way up to 108. That's still in play. If we have any gains of like the local little resistance that we have now, we should see a charge towards 107 and 108. The moves kind of already happened for the most part, so it won't be an easy continuation drive. That being said, this kind of golden zone is where we're looking for a macro failure on the highs. If we get a macro failure, so let's say we get a pop up into the zone and then we get a secondary failure, expect us to do some really nasty things, and then start breaking down pretty aggressively. And this allows us to build up that kind of short liquidity above us, right? Now, because we've been in this flat area for already 2 weeks at these new all-time highs, I would prefer that we actually assume we're still in a bull market and actually gain it and just start ripping up towards new levels, 114, potentially 118. If we do happen to break down from here, right, the local level to hold 105, if you see that local failure, you're going to see a snap retracement towards the daily open at 103.7. And then we have to talk about holding major levels. The nice thing is we've stepped off aggressively. We've created support and demand at 102, call it 3 down to 101.3. So this whole block from the weekly open to the previous weekly open, this is all local support. If this area fails, right, if we break down, make new lows, bearish retest, then we target the lows that we did under 100K. So that's the only way we really start to break the structure on the trending up price action, which we've now established, is losing that previous weekly open. That invalidates the gains and it forces back into this low range zone. So for right now, you are still trending up, still targeting the kind of golden area where there is a chance, a pretty good one, to hedge off your longs to push it back lower. However, like I said, don't be really tentative to short into a strong upside move that does that. And yeah, to the downside, really simple. If you go lower time frame, you've got a nice perfect swing test going on right now. If you see that loss, you should come back to the local demand at the daily open. That should definitely be a target if you start trending down. Besides that, it looks good. The market's recovering very nicely. Just a quick scan on TradFi. TradFi in general looks okay. Pretty neutral on the day, and it's on a decent recovery throughout the week. The big one that stands out is the VIX coming down aggressively, which is good to see as well. And an important thing to keep an eye on is the CME. The Bitcoin CME is actually trading at a $700 premium, $600-700 premium to the TradFi to the Bitcoin market. So to both the Tether and USD pairs, Bitcoin CME is trading at about $700 premium. That's called contango. That's good. That means that they're still willing to buy at higher prices in the expectation that the price of Bitcoin will go higher over time. So that's that. Take it easy, and I will catch you on Friday. Peace.